Okay. Hi, good morning, everyone. I'm Darren from Investing Note. Thank you for joining us today. Today is the third day of Invest 360. Okay. So the topic for this session is overview of Bursa Malaysia outlook for 2021. Okay, and today we have Azhar as the speaker for this session. So let me do a very brief introduction. Azhar was appointed by Bursa Malaysia as the Director of Security Market Division in October 2020 and is primarily responsible for developing primary and secondary market, products, retail and institution market, digital development, Islamic market, and products, so forth. So if you have any question during the presentation, on your right hand side, there is an orange box, so you can type the question in there. So we will have the time for the Q&A session. So without further ado, let's welcome Azhar. Hello, Azhar.
Hi there.
Hi,
Darren.
So I will just pass the time to you.
Thank you very much, Darren.
Thank you.
Okay, let me get organized. Okay, good afternoon, ladies and gentlemen, and welcome to day 3 of the Invest 360, the Investing, Finance, and Wealth Summit. I hope everyone is safe and sound wherever you may be, and I trust this online summit will be as beneficial to you virtually as if we were to meet face to face. Before I begin, allow me to thank our organizers, Share Investor and Investing Note, as well as our sponsor, CGS CIMB, for putting together this virtual event. It's truly an honor for me to be here. My name is Azhar, and I'm very glad to be given the opportunity to talk about the outlook for the Malaysian market for 2021. As some of you may know, I'm actually very new to Bursa Malaysia, as Darren had mentioned, and I only celebrated my 3rd full month with the exchange just last Tuesday. But before you turn off your screens, I'd just like to share with you that I've been involved in the capital market for a quarter of a century. I was an investment banker for 2 decades, and thereafter I headed Capital Markets Malaysia, the promotional arm of Securities Commission, our capital market regulator, and more recently, I joined Bursa Malaysia to head the Securities Market Division. Now, when I was initially invited to participate in this event several months ago, of course, I was very excited, and I was very, very hopeful that by the time we reached January 2021, we could all be sitting in the same hall, but unfortunately, we still have a while to go before we are able to go back to a normal environment. Having said that, while 2020 has proven to be one of the most difficult and challenging years on our planet, and we have had to endure on account of the COVID-19 pandemic, the number of positive cases, and sadly, the growing number of deaths reported both at home as well as across the globe continue to mount. This despite the availability of vaccines, which are slowly but surely making their way across the globe. Unfortunately, the global pandemic continues to impact global economic activity, and no country and no region has been spared. But as with any crisis, certain segments of industry within each economy has seen tremendous growth, resulting in many of the relevant companies experiencing supernormal profits on account of the sudden demand for their products and services. This segment, or rather these segments, include specifically areas of technology, healthcare, and the medical supplies related subsectors. As everyone would know, several Malaysian companies involved in these segments have also benefited from this environment. And these very companies played a very crucial role in garnering investor support on Bursa Malaysia that has placed us among the best performing stock markets in 2020. But before I talk about the outlook for the Malaysian market, or Bursa Malaysia as the Malaysian equities market specifically, I think it would be useful for me to outline how we performed in 2020 in order to provide you with a better understanding of how we see the market developing in 2021. Let's run through the highlights and the backdrop to 2020. While 2020 will go down possibly as the most challenging year for everyone across the globe, it's very fortunate that Malaysia entered the COVID crisis from a position of relative strength. Solid fundamentals built over the years provided us with the strength and the resilience to deal with the immediate external shocks. The government was quick to devise and deploy a multi-pronged approach to managing the economy, working closely with our central bank, Bank Negara, and our capital market regulator, the Securities Commission, as well as our private sector, to identify and introduce various initiatives aimed at managing the anticipated impact of the pandemic on the domestic economy. Among these initiatives included keeping domestic interest rates low, so low that OPR, or the overnight policy rates, reduced to levels below what we experienced during the global financial crisis back in 2008, 2009. This, together with other measures, were essential steps taken by the government from the outset to help encourage domestic economic activity that was suddenly faced with unprecedented challenges. So much so, Malaysia's unemployment rate reached a record high of 5.3%. More than 800,000 people were jobless. For a relatively small country, having close to 1 million people out of work is something we have rarely experienced. Steps were immediately taken to put money into people's hands to ease loss of income, and into the hands of businesses to help subsidize loss of revenue and to manage cost and expenses. In support of these much needed initiatives, Malaysia's healthcare system demonstrated robustness and resilience to deal with the initial growth in positive cases. Diversified sources of growth and external trade also helped mitigate domestic and external developments. As for the capital market, the other key characteristic was the continued presence of strong domestic institutional and retail funds, which helped provide for a deep and liquid financial market. Despite the global pandemic, Malaysian equities demonstrated resilience compared to other markets across the region and beyond. While Bursa's benchmark index, the FBM KLCI, lost 5.5% in the first half of 2020, other markets in ASEAN experienced even larger declines, with benchmark indices shedding between 14 and as much as 22%. For the first half of 2020, Bursa Malaysia was the best performing market among the emerging markets in ASEAN. We even outperformed the MSCI Emerging Market Index that dropped by as much as 10.7%. Foreign ownership of Malaysian equities also remained above 21%, while short-term investors and speculators exited the market. Strategic and long-term investors remained in the market. Within a short time, market trends began to emerge and opportunities were uncovered. As I mentioned earlier, healthcare has been a key beneficiary of the pandemic, from the increase in demand for medical-related products, up 185% as at December of last year. The drive for digitization post-COVID-19 had benefited the tech-related companies, up 83.9% since up to December 2020. We also saw companies listed on the exchange that were dual listed everywhere elsewhere had also higher valuations on Bursa Malaysia compared to its secondary listings on foreign exchanges, largely due to Malaysia's equity market being a provider of higher liquidity in specific sectors such as healthcare and even mining. These sectors provided better valuations at home, and due to the ecosystem that better understands these specific industries. Now, a very important point to note, 2020 saw a marked increase in retail participation in the stock market. Just to share some of my personal experiences, at various stages of my career, I have played a part in originating and introducing various initiatives to boost retail participation in our domestic market. It was always challenging, and admittedly, overall success was nominal. But suddenly in 2020, retail participation recorded a 10-year high of 33% over the 12-month period. Retail ADV, the average daily value of stocks traded, increased by 260% up to December 2020 compared to the previous year, from as little as 400 million ringgit in 2019 to 1.443 billion ringgit in 2020. We believe the low interest rate environment, coupled with the fiscal stimulus initiatives, such as the 6-month moratorium introduced on loan repayments, encouraged retail investors to explore investment opportunities on the stock market. In addition, the improved level of sophistication among retail investors also helped sustain the positive momentum, unlike in previous bull runs. Financial literacy among retail investors enabled them to invest in an informed manner. So the low interest rate environment and increased liquidity from the stimulus packages encouraged greater retail investor participation, who looked at means to grow their wealth through investing in the equity market. Share margin financing levels have been healthy throughout the year, about 2% higher if compared to 2019, an indication that investors are investing with their own funds from the available liquidity, as well as taking advantage of the low interest rate environment. The availability of information tools also played a major part, as the information and tools available online offered by both Bursa as well as our brokers allowed investors to stay updated on new developments. The availability of online trading platforms, for example, also offered by local retail brokers, provided retail investors a very convenient and secure means to trade, so much so 80% of trades were conducted online. Now, of course, COVID-19 impacted the market. While gloves and other medical related sectors did well, others not so. And we did experience a divergence of performance across all sectors. At the lowest point, the market hit a year low of 1,219.72 points. And that was in March of 2020, when the movement control order was first implemented. So how did we manage, you may ask? Given the heightened uncertainty surrounding the COVID-19 pandemic at the time, Bursa Malaysia took a proactive stance and introduced a series of measures to ensure the market continued to operate in a fair and orderly manner. Robust market management measures were put in place to manage excessive volatility through circuit breakers and static and dynamic price limits. Healthy clearing funds, margins, and deposit levels were put in place to ensure clearing and settlement risks were managed. So we proactively monitored ongoing developments to ensure the marketplace remained orderly. All capital market intermediaries, for example, had put in place business continuity frameworks to ensure their business continuity in times of crisis. A multi-pronged approach to educate and protect market participants through various means, including fostering investor confidence, ensuring availability of the necessary systems are in place, creating and expanding investor education channels, and providing assurance of a fair and orderly market via robust market controls. In times of crisis, especially during the COVID-19 health crisis, it was extremely vital to ensure the stock market operated efficiently. Bursa Malaysia is a crucial segment of the financial market infrastructure, and it is considered among the nation's essential services. So despite being in a crisis, it remained a vital platform for investors to continue to invest and for companies to raise capital or to hedge and manage their risks. The closing of the market would not mitigate or address the underlying causes of market volatility. It would further create uncertainty and adverse market sentiment by denying investors the ability to access their investments. We have a resilient domestic market and a capital market ecosystem that must continue to operate. Within this market, there are as many as 80 fund management companies with 813 billion worth of assets under management. That's roughly 200 billion US dollars, of which they invest 47% of their funds in the Malaysian equities market. We are home to 29 equity brokers that serve 2.5 million account holders, and all of this requires the exchange to remain open. Considering the wide-ranging effects of COVID-19 pandemic, Bursa implemented various measures, both financial and non-financial, to help market participants. These measures were designed to lessen the financial burden as far as we could and provide greater flexibility for listed issuers and market participants directly impacted by the crisis. In terms of financial assistance, financial assistance came in various forms. We had waivers of listing-related fees for new IPOs, rebates of up to 50% of annual listing fees for the year 2020 for listed issuers that met specific requirements. Various financial-related measures were also introduced to market participants, or namely brokers, who were given various flexibilities to manage margin accounts. In terms of non-financial assistance, measures were also introduced to provide listed issuers with greater flexibility to focus on critical business needs while managing health concerns, providing more effective disclosure to investors, and these were broadly in line with common practices across other jurisdictions. Bursa intensified its offering of its expanded suite of investor education platforms and webinars. We launched Bursa Academy, 3 virtual editions of Invest Malaysia Kuala Lumpur, and numerous sectoral webinars. In addition, market management measures were introduced to preempt and manage market sentiment to ensure a fair and orderly market. These included temporary suspension of short selling activities, which I'm glad to report was uplifted in December. We revised or narrowed the static and dynamic price downside limits for FBM KLCI component stocks. And these are merely a summary of some of the initiatives that were put into place. So what sets Bursa Malaysia apart moving forward? Well, the various initiatives and measures introduced and put in place over the years have built a very strong foundation for Bursa Malaysia. These steps have resulted in a marketplace that is able to capitalize on new opportunities and, perhaps more importantly, manage change and uncertainty. We continue to focus on widening our products and services to create a conducive capital market ecosystem for all participants. In recognition, we have been awarded various accolades, but I shan't go into that today. Overall, Bursa Malaysia's performance in 2020 was one of the strongest in the ASEAN region. In terms of the indices growth, compared to the 5 largest markets in ASEAN, excluding Vietnam, our benchmark index recovered the most compared to the sharp overall declines experienced in the earlier part of the year when the impact of the pandemic began to escalate. In terms of ADV growth across ASEAN, Bursa has had the highest gain in average daily trading value, which reflects the confidence and positive sentiments of investors, both local and domestic. Specifically, healthcare and technology sectors benefited from the pandemic due to the heightened demand in medical-related products, as well as the accelerated development in digital capabilities. Now, where are the opportunities moving forward? Let's look at the electrical and electronic sector. Opportunities for Malaysia's E&E sector are emerging from the reorientation of the global supply chain. This is due to the unresolved US-China trade tensions, and COVID-19 has led to push towards more resilient supply chains rather than an overdependence on China and the single source, or rather single sourcing models. From a demand perspective, the E&E sector is also set to benefit from the digital transformation and the shift towards a low-touch economy in a post-COVID-19 world. Semiconductors. Semiconductors may also be in high demand for products and services such as contactless solutions, automated delivery solutions, and digital work processes, and the Internet of Things. This is especially lagging in sectors such as healthcare, government-related services, and even defense. According to the World Semiconductor Trade Statistics Organization, global semiconductor sales is expected to accelerate by 6.2% in 2021, doubling 2020 figures of 3.3%. With an established position as the 6th largest global semiconductor exporter, Malaysia is well positioned to be a beneficiary of this structural change, being home to major technology firms leading the way in producing industry-leading solutions towards the 4th industrial revolution. Let's look at healthcare for a moment. The healthcare sector has been the best performer year to date, with the index recording over 200% growth overall. The ongoing pandemic has spurred demand in gloves, although it is expected to normalize at some stage. However, the sector will form an important component to the new normal and contribute strongly to preventive efforts, enabling economies worldwide to continue operating. This will materialize in sustained demand and higher average selling prices, contributing strongly towards earnings. Malaysia is proud to be among the largest glove manufacturers globally that has made the country a premier source for these much-needed products. Still on healthcare, medical tourism is yet another rapidly expanding sector in the Malaysian healthcare sector, growing 17% annually from 2015 to 2018. In 2018 itself, this sector or subsector generated 1.5 billion in revenue from 1.2 million healthcare travelers. The government also continues to work with the Malaysian Healthcare Tourism Council to strengthen the position of Malaysia as a preferred destination for health tourism, specifically within ASEAN for oncology, cardiology, and fertility treatment. From this segment alone, the economic impact accounts for expenditure on transportation, accommodation, and tourism, which includes retail shopping and many other activities. Here, we see how the healthcare travel industry is one for collective economic growth. Small and medium enterprises in tourism, transportation, and other niche services can benefit from the single industry. While the onset of the pandemic and restrictions on air travel today may have hampered arrivals, the long-term prospect for this segment remains very promising, given its multiplier effect to various sectors. Now let's spend a little bit of time on Islamic and sustainable investment opportunities. Bursa Malaysia has established itself as a leader in the Islamic equity market, and COVID-19 has placed greater prominence on sustainability. We believe the shift towards sustainability, ethical or value-based investing globally augurs well for Bursa Malaysia. Approximately 77% of our listed stocks are Sharia compliant, and almost 40% of our exchange-traded funds are Sharia compliant. The convergence of sustainability, responsible investing, and Sharia investing is expected to deepen our competitive edge and make our offerings highly relevant to investors worldwide. In the palm oil space, our leadership in the palm oil suite of capital market offerings will remain a potential strong growth catalyst. Bursa Malaysia Derivatives operates a well-regulated, most liquid and successful crude palm oil futures contract globally, the FCPO, positioning Malaysia as the global price benchmark for crude palm oil. FCPO, or rather the FCPO contract, is an established and well-balanced product consisting of a 50-50% balance between institutional traders and other market participants. Bursa Malaysia Derivatives products are hosted on Globex, which provides global access to traders. Now, let's look at the digital space. Bursa Malaysia aims to take advantage of the growing opportunities presented by technological developments toward maintaining our competitiveness, growth, and future-proof our business. Under Bursa's strategic roadmap, we aim to leverage on digitalization, technology, and data, and to achieve this, forge partnerships over the next few years to transform the customer experience and improve cost efficiencies for the benefit of everyone involved. An initiative that is also progressing, including exploring the emerging fintech area, such as blockchain, artificial intelligence, machine learning, data analytics remains ongoing, and investing in our core technology systems to enable us to deliver new services digitally. In this regard, we hope to bridge the gap by forming close collaborations between industry players and technical experts toward achieving a common goal. As an exchange, Bursa can and is looking to take advantage of our respective and unique areas of expertise to build partnerships, to create a holistic ecosystem, and pool together our know-how to ensure the whole industry benefits. In terms of growing the investor base, Bursa Malaysia has continuously taken steps towards promoting financial education and financial literacy. We continuously work at providing tools that will help investors make informed decisions on instruments to ensure a sustainable market in the long term. As demonstrated in 2020, retail participation has been gradually increasing over the years, and we believe this is partly the result of our efforts in investor education and retail promotional initiatives. This has resulted in retail ADV growing by 260% in 2020, as I mentioned earlier. A marked increase in retail contribution to total ADV, rising to 34.3% in 2020, compared to only 21% in 2019. At the end of 2020, retailers were net buyers at 14.2 billion worth of securities. Another point to note is that 65% of these new account openings were from the millennial group, those aged between 25 and 40. Factors that have contributed to the increase in retail participation include collaborations with our broker partners through activities, events, and campaigns to improve awareness of the stock market. These include targeted marketing activities to specific market segments such as millennials, women, university students, and the promotion of specific areas such as Sharia investing. A strong focus on digital marketing and advertising has also optimized our reach more effectively. We introduced various new initiatives and products to broaden the depth and vibrancy of our market. Continued enhancement of our digital touchpoints, such as Bursa Marketplace and Bursa Anywhere. Our Mirror Learn and Trade learning platform continues to gain traction among new market participants, eager to learn and understand investing in equities. These continuous efforts to promote investor education has helped provide the basic and intermediate skills and the knowledge needed for investors to invest in our products. Technology has been at the cornerstone of innovation in financial markets globally, making them more efficient and transparent, and more importantly, it has spurred investor participation and demystified investing. Moving forward, Bursa must continue to evolve, provide greater convenience, open new channels of access, and provide compelling products to sustain the interest of investors. So what will the future look like? We have initiated Bursa's 3-year strategic roadmap, and we have refined our vision and our mission, and we're implementing a strategic framework that is future-focused. This focus will take into account sustainability in both our organization and our product offering. We aspire to be a multi-asset exchange and become the main platform for financing, wealth management, and offer relevant products and services. We plan to achieve this through 3 broad categories, namely product expansion, ecosystem development, and capacity and capability building. So Bursa will continue to evolve and adapt to the ever-changing environment. And as we aim to provide greater convenience, open new channels, and offer compelling products to sustain the interest of investors. Diversity of product service offerings is a strong magnet to draw investors, and we will continue to work with all relevant parties to expand that product base. At the same time, we will continue to explore the latest technologies to achieve this and enhance the robustness of our infrastructure. There's nothing more important but for us to stay in tune with the diverse needs of investors and their growing demand for wealth management options beyond traditional instruments. We will also be looking, of course, to the needs of those who need and require capital. Collectively, this can help fortify Bursa's long-term readiness to deliver best-in-class solutions as an investment platform. This brings me to the outlook for 2021 and beyond. In terms of economics, general consensus is for Malaysia's economy to recover in 2021, underpinned by improved global demand and a turnaround in public and private sector expenditure supported by the right policy initiatives. The Ministry of Finance and Bank Negara Malaysia has forecast for Malaysia's GDP 2021 to grow and rebound by between 6.5 and 7.5%. But I must note, given the recent reintroduction of the MCO in certain parts of the country, this number would need to be adjusted somewhat. Having said that, the IMF, the World Bank, and ADB have also projected for our economy to expand within a similar band. More favorable economic conditions bode well for a recovery in corporate earnings in 2021. Now, albeit the pace and strength of recovery of our domestic economy remains subject to several downside risks, the re-escalation of trade tensions between major economies could cause renewed disruption of trade and pose additional challenges to the global economy. In terms of projected economic growth, however, it is potentially achievable given the low base given the low base following the contractions that we experienced in 2020. The success factors, however, are dependent on the scale and timely resumption of business and economic activities, which forms the underlying assumptions for this projected growth that is supported by the low interest rate environment and policies that will enable easier access to capital, stimulate consumption, and drive investment. 2021's expansionary budget and various fiscal stimulus policies announced by the government will help mitigate some downside risks some downside risks posed by COVID-19 and the geopolitical developments and protectionist policies that can potentially dampen international trade. Given the continued uncertainty, the immediate priority is for us to work steadfastly towards getting our economy back to normalcy. Now, where's the market heading? Dare I say it's still anyone's guess. But what I am willing to share, based on what we have seen so far, is that as much as we'd like to believe the worst is over, we are still not out of the woods. So the effects of the global pandemic on our market and everyone else's, be it good or bad, will continue to remain for some time to come, as the spillover from 2020 will likely be sustained for the earlier half of 2021. This brings me to the question as to when we can see true normalization, specifically in terms of economic activity, as this would have a material bearing on economic recovery and where to put your money. This will also give us some indication as to when markets will take cue and act accordingly. From the continuous conversations with market participants, and as many of you would know, 2020 witnessed only a handful of listings and secondary offerings on Bursa Malaysia, as companies and business owners remained cautious throughout the year and withheld their listing ambitions and held back on having to raise capital unless absolutely necessary. In this regard, I am given to understand that there is a growing list of companies seeking to tap the market in 2021. Not all, but several of these companies, as I understand it, were ready to go as early as the first half of last year, just as the pandemic began to make headway and business owners quickly decided to put things on hold. So whether to raise capital or replenish capital, these companies are already taking the necessary steps to prepare to come to market. So it really would be a question of when this happens, and perhaps more importantly, how the market would react in terms of sentiment and support. However, what puts us in a better position is what I talked about earlier, liquidity. Ample liquidity remains our strongest point, as funds are raring to go given the right investment opportunity and the right timing. So we anticipate a good number of companies will come to market this year, and these most likely will include a good number of main market as well as ACE and lead market IPO opportunities. To summarize, Bursa Malaysia has experienced a very eventful 2020. Key point to note, retail money is back to an extent that institutional money has taken a back seat. But let me clarify and assure you, in terms of value, institutional funds remain a very large and the bigger chunk of the pie and has not shrunk in terms of size. But with retail funds in, institutional funds appear to play a smaller part, but that's only because it's now part of a much bigger pie. This brings me to my final analysis. Ample liquidity and what appears to be a very encouraging pipeline of investment opportunities along the horizon. Which sectors? Well, we've gone through all the thematics. So I leave you with that thought for you to ponder in your own time. Thank you for your attention. Thank you for your time. Thank you, Darren.
Hi, okay, so we can go into some Q&A section for a few questions. Okay, so if you have any questions, you can put into the orange box on your right hand side and you can just enter your question over there. Yep. Okay, Azhar, are you able to see the questions?
I am able to see the questions. Hold on.
Yep, sure. So there's a questions that the people ask, is the surge of Bursa Malaysia in 2020 something that we can expect for 2021 as well?
I'm able to see the questions. I'm just
Yeah, sure.
okay. Just give me a second because there's a bit of an echo.
I see.
Okay, there's a particular. Okay, there's okay.
DJ Hasha, the video over there, right? There is a volume part. You can stop it first. I think you can. This is the things that you are hearing, right? The echo.
Sorry, can you tell me again which part is that?
Okay, so the right hand side is the pigeonhole, which is with the Q&A, and the left hand side is the video, right? In the video, okay. So when your mouse over, then it will have a pause button. You can click on that. You will stop.
Okay,
Okay, great.
that's much better.
Yeah, great.
Okay, sorry for the delay there. There was a question that you mentioned earlier.
Yes. Okay, so there are a few questions over in the pigeonhole. Maybe you can pick one.
Okay, one of the questions that was raised, let me see. Okay, can you give a view on the prospect of banking and airline stocks to invest as Malaysia's economy gradually picks up? Now, I think if you recall from the time when, I think it must have been in November, when the announcement of all the vaccines started to come out, there was an immediate reaction where many of the sectors that were lagging behind for most of 2020 came back, the level of interest. And one of the key sectors that a lot of people started to pay attention to was banking stocks. And this was very, very notable. Now, the question actually asked about banking stocks and airlines. Airlines, obviously, I think it's going to take a little bit longer. But banking stocks, for example, have appreciated by a significant amount. I don't have the statistics in front of me, but I know for a fact that Public Bank, Maybank, CIMB, for example, all of these three, the biggest banks in the country, the prices just jumped up almost immediately after the announcement of the vaccines. Also, we also noticed that many of the tourism, or rather travel-related stocks, also picked up during that same period. Although airlines was not one of them, but some of the like hotel groups and companies which are involved in the travel trade saw a significant pickup and re-rating. There's another question that I've seen here that I'd like to answer, if I may.
Yeah.
If the surge of the Bursa market in 2020 is something that we can expect for 2021. This is question. If you see the question now.
Yes.
2020, as I mentioned during my presentation, was very specific in terms of how the market actually changed. And one of the main contributors to the improved market conditions, or rather the level of support for the market, was really driven by, to a large extent, the retail market, which I talked about to a great extent during my presentation. Now, this was caused by a number of contributing factors. And as I had mentioned earlier, one was the fact that the stimulus packages and some of the measures introduced by the government included how there was a 6-month moratorium whereby people didn't have to pay housing loans, didn't have to pay car loans, or even personal loans. This provided for money, or rather your cash flow was improved. The retail cash flow was really, really improved. We believe that, plus that low interest rate environment provided the opportunity for the retail market to start putting their extra cash into the market. But this, we see, has been sustained until even now that we've crossed into 2021. As for 2021 itself, of course, there is a lot of views and different schools of thought in terms of whether or not it is sustainable. Obviously, people are saying that once people are able to go back to a normalized economy and people are able to go back to doing what they do best, they may not have the time, or they may not have the ability to pay so much attention to the market. But I sincerely believe that once they have already been involved and there's already such a large contribution from the retail market, I would like to think that maybe you might see some proportion putting their money into, say, for example, yielding stocks or dividend players, so on and so forth, or growth stocks. But I think the retail market will still be somewhat sustained for 2021. What will also bring as a catalyst, or rather contributor to 2021, is the fact that, as I mentioned, a lot of companies that were aiming to tap the market either through IPOs or existing listed companies that are aiming to raise secondary funding or rights issues, so on and so forth, you will see a number of these companies, more so from last year, coming to tap the market. So I think in terms of 2021, you will see, for different reasons, of course, the market will continue to be very popular.
Yep, great. Okay, we can go for next question.
Okay. There was one that I actually saw earlier.
Yes.
Okay, how do you see KLCI index ranging for 2021? That's a very, very difficult and very good question, I must say. I think it's Merv who sent it. Now, obviously, if I'm able to guess this, it would be very, very good for everybody, especially those in this room. But I'm just thinking now, the way we see things, obviously, 2020 was an anomaly in a sense that the numbers in terms of trading volume and even the value of trades on a daily basis shot up to a point where it was well above where it's ever been in the past. But in terms of the index itself, the index has actually performed to higher levels. So with the level of activity that's already been achieved in 2020, I think we would like to think that moving forward for 2021, you will still see room for growth where 2021 is concerned. Shall we take one last question?
Yeah, sure. Okay.
Okay, I've answered indirectly that one. Why was government? What are my views on glove stocks?
I think this is a very frequent question.
It is a frequent question. And strangely, I mean, obviously, I read a lot of research reports coming out from the various research houses. And there are differing views. So I am not going to go specifically into which particular, who said what, rather. But let me just say that we believe that this, or at least me personally, I believe that this sector will continue to be to hold very, very strong, as the need for the product itself is not going to taper off anytime soon. And as far as I'm aware, even though we are able, let's say within a year's time, everyone across the globe is vaccinated, I think that the demand naturally for these type of products, not just gloves, but even for masks and what have you, will continue to grow and continue to be very, very strong in the years to come. Because even if we are all inoculated and take the vaccine, I truly believe that the demand for this particular product will continue for many, many years to come. I mean, gloves and basically masks and all these things are a very essential part. And the new norm, even though we go back to the normal economic activities, you will see that a lot of people will continue, and especially in the healthcare and frontliners, will continue to need this product for a long time to come. And so will the general society.
Yeah. Okay, so this will be the last question. So great, thank you, Injek Azhar, for sharing with us on the insight for Bursa Malaysia and also for the Malaysia stock market for 2020 and also 2021. So thank you very much. So the next session will be start at 7 p.m. The topic is the fundamental shift, how we can look at our 2021 portfolio. The speaker will be Miss Tilling. And make sure you tune in at 7 p.m. this evening. So last but not least, remember to click on the top part. There are a virtual hall button. We have some surprise for you. So remember to click on that. So thanks again for joining us today, and we will see you on next sessions. So thank you, Injek Azhar, and thank you everyone. Bye-bye.
Thank you, Darren. Thank you.
Thank you. Bye-bye.